I bid you all good morning, good evening, and good night, wherever you're watching this transmission. It is I, Mike Martins, broadcasting from Merritt, British Columbia. Gundlach sounds alarm on paper gold ETFs, raking in billions. Holding in gold ETFs at a record high amid haven demand. ETFs don't entitle investors to physical gold. So there's a lot of misleading going on where people think that they're invested in gold stocks or invested in... Remember, there's the paper market that we've created over the last 100 years. Well, pretty much since World War I. And there is the actual physical markets that they've been trying to suppress for so many years. And Jeffrey Gundlach has a warning for investors piling into gold-backed ETFs. Don't think you're going to get the physical metal back. That's something we need to set straight here on this channel. Street Corp 50 billion SPDR Gold Shares ETF, ticker GLD, attracted 2.9 billion of inflows last week. Its bigger haul since 2009. As haven demand amid escalating COVID fears boosted the metal. Meanwhile, assets in gold ETFs climbed to record on Tuesday, according to data compiled by Bloomberg. Thank you for compiling this, Bloomberg. So this is just a COVID tracking system here. Too many cases out there. All right, let's get to the meat and potatoes here. The demand for such ETFs is flashing a warning for a sign of Double Line Capital's chief investment officer, who cautioned against the products during the webcast on Tuesday. While ETFs such as GLD are backed by physical gold, the process for an individual investor to acquire the actual bullion isn't as simple as selling the shares of the ETF. Pay attention to this, guys, because this happened. I don't know if you guys remember the whole Brex time. Brex, when things were happening and a lot of people weren't being well informed on what's happening with the company. There's a good documentary you might want to watch about Brex Gold. Helicopter jumping, if you want to call it. Paper gold. ETFs are little more than speculative vehicles. This is brilliant. Speculative vehicles. That's like a perfect way to put it. Gundlach said the buyers should be aware that holding shares doesn't amount to having gold bars. What happens in physical gold is a short supply to everybody wants to take delivery of their paper gold. Gundlach said they can't squeeze blood out of a stone. So remember, guys, on the channel, I think this was on the channel that got shut down before this one. I got a channel shut down before this one, and I was really heavily following. This was in 2010 or 2009, 2010. I was heavily following the gold at Deutsche Bank that people wanted their gold back because they had their paper certificates, not ETFs, so to say, but more like they bought an ounce of gold at Deutsche Bank. They stamped it and said, on this date, you bought this gold for this much, stamped by the bank, ready to go. Keep it in here. We'll keep it in our safe. Keep that paper. Bring it in anytime and get your gold. Well, people aren't getting their gold. And it's been going on for years. And there's even a lot of court cases going on with this. Like, cause some people bought tens of thousands of ounces of gold when it was sitting at $1,100, right? $900, $1,200. So people were getting in at the right time. But now it kind of sucks to be them because they didn't get the physical, right? The process of swapping GLD shares for physical gold sits outside of the normal dealings. According to the State Street Global Advisors, head of ETF research Matthews Bartolini, Bank of New York Mellon, the fund's trustee doesn't interact with the public, but only with the middlemen known as the authorized participants. Traders who channel assets in and out of the fund, and investors who have to work with the GLD APs to acquire gold, he said. An individual investor wishing to exchange the trust shares for physical gold would have to come to the appropriate arrangements with his or her broker and an authorized participant to receive the gold bars, Bartolini wrote in an email. Gundlach said earlier in March that while he was neutral on the gold mining companies, the metal would ultimately go higher. The 51 billion double-line total return bond fund. Here it is here. Let's take a look at it here. So there it is. So it's taking a dip here, eh? Wow, and it's wow, look at that. At the beginning of March, it just got its butt kicked. Look at that. Right here, guys. Let's look at the full chart. Ho, 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 ho. That's at the beginning of March. I guess everybody jumped on. And then I get what people want to cash in, I guess. Went down $1, almost $1. So there it is there. And then there's just this March here. There it is here for the last month. There you go. That's better. 6 months, you can see it better here. Wow. Wow, wow, wow. So a lot of people, I guess, yeah. I got out of my paper stocks in paper gold in January, right? Then I dumped a bunch in pharmaceutical. That did well, right? So you gotta kind of follow the trends, right, guys? Gundlach said earlier in March that while he was neutral on gold mining companies, the metal would ultimately go higher. We did this, and Gundlach's mortgage-focused flagship fund lost 1.3% this year through Monday and returned an annual average of 2.6% over 5 years. Okay. From Bloomberg Intelligence, Eric Blackunas, that process isn't necessarily a problem. Most investors buying gold ETFs are doing so to get exposure to the bullion price movement rather than acquire physical gold, he said. I know a lot of people that are in this, and they don't want the gold. They just want to have the movement, sell, make the money, right? The problem with getting physical gold is you've got to insure it or keep it in a safe spot, Blackunas said. Generally speaking, most people don't want the gold. They want the return stream that gold gives, right? People have physical gold and silver. We do have some, right? But it's not about. So here it is. This is the gold ETF holdings rise to an all-time high. So there it is. This reminds me of 2009, 2010 oil, before, when it was at $130 a barrel, $120 a barrel. Oil ETFs were just like this, and then you see this sharp decline in holdings. And you saw a lot sharper decline in holdings in the last 3 months. So there it is, guys. Be careful what you buy. Be careful. Be careful. Read all the fine print, guys, because this is your money. It's not theirs. It becomes their money in the end, right? For everyone that loses $1 in the market, someone out there is making $1. Remember that, guys. It's a tug-of-war game. Be smart, right? Like Lord Humongous says on the channel. He always says, guys, make sure it's physical gold and silver in your hand is real money. Let me know what you guys think in the comments below. Guys, don't forget to message me on Instagram. It's just Mike Martins Official. If you want to send me messages, I get a ton of messages on Instagram. Go ahead and do that. Send me any links, show tips. I'd be glad to. I read like 50 emails a day, so sometimes 70. Send them to me. I'll check them out. Don't forget to set your reminders here for Mike in the Night. And Trends in the Housing Market is going into its 200th episode. So, guys, don't forget to join me this next Wednesday for that, please, if you don't mind. Mike in the Night starting at 8 p.m. Pacific time. So it starts 11 p.m. Atlantic, so people could jump in before they go to bed. Let me know what you guys think in the comments below. Lots of love. Please share this video and get it out there. And make sure that people are understanding what's happening when they buy paper, right? Thanks for watching.